Hello everyone, I'm Yazan Ibrahim, or as some of you might know me, Yazan Abu Ghosh. Today we're going to dive into a fascinating and essential topic, Fraud Examiner Section 1, Financial Transactions and Fraud Schemes. Welcome to today's deep dive into the world of fraud, where we'll explore the 1.11 insurance fraud, types of insurance policies, agent broker fraud, underwriting irregularities, vehicle insurance schemes, property schemes, life insurance schemes, liability schemes, red flags of insurance fraud, computer-generated detection reports, workers' compensation fraud. Whether you're an aspiring fraud investigator, a business owner, or simply curious about how organizations manage their finances, or if you are auditor, this journey will shed light on the often complex systems that drive decision making. Insurance fraud is a multifaceted crime that targets one of the world's vital financial systems, both internally and externally, by exploiting the unique nature of the insurance industry. Imagine a system designed to safeguard against loss and manage risk, storing immense pools of liquid assets derived from policyholder premiums. While this accumulation is crucial for processing claims and maintaining operations, its very existence makes insurance companies prime targets for fraudulent schemes. Understanding the depth of fraud in this industry not only highlights the creativity of perpetrators, but also underlines the importance of robust countermeasures. At its core, insurance operates on trust. Companies promise to cover expenses related to specific losses, and policyholders promise to provide accurate data and timely premiums. But corruption can arise both within and outside that system. For instance, insiders, like employees or agents, might manipulate processes to siphon money. Consider scenarios like premium theft, where an agent collects payments from unsuspecting customers but fails to forward those funds to the insurance company, leaving them uncovered in emergencies. Or the disturbing ingenuity of agents falsifying death certificates to cash in on fraudulent life insurance claims, a small investment yielding massive illegal payoffs. On the flip side, external fraud schemes abound, particularly in healthcare insurance, where two main players emerge: providers and policyholders. Providers could be doctors or institutions billing for services never performed, while claim fraud by policyholders might involve fabricated injuries or inflated medical costs. The scope for deceit broadens when we consider scenarios like staged vehicle accidents, where criminals orchestrate collisions, or paper accidents, entirely fabricated claims designed to exploit gaps in investigative efforts. Think of someone reporting a phantom vehicle, a car that exists only on paper, collecting insurance payouts without evidence of the car's existence. Even operational processes susceptible to alteration can become breeding grounds for fraud. Misrepresentation, for instance, allows sales agents to falsify critical customer details like medical history or address to offer lower premiums, garnering more sales but destabilizing the system. Such dishonesty can ripple into related practices like tombstone policies, where agents forge insurance on fictitious individuals, often copying names from graveyards. While this might evoke images of macabre cunning, the financial implications for the insurer and subsequent policyholders are staggering. Insurance representatives themselves sometimes employ unethical sales tactics tied to personal gain, leading to practices like twisting, pressuring customers to replace old policies with newer, more commission-heavy alternatives, or churning, which involves duping individuals into exhausting the value of their current plans for additional coverage that may ultimately cost more than it's worth. These actions can destabilize not only the customer's financial certainty, but also erode trust between the insurer and insured. The variety of vehicle insurance schemes offers another glimpse into the creative extremes of fraud. From ditching, where owners dispose of their vehicles to claim them as stolen, to smuggling operations shipping cars overseas for resale while collecting maximum insurance payouts, perpetrators exploit every angle of policies intended to safeguard property. There's even the relatively common yet devastating ramification of staged accidents, often carried out by crime rings cycling unendingly through their schemes in different locations. Each of these cases highlights vulnerabilities within the system and a shared motivation to exploit legal safeguards meant to protect consumers and businesses alike. Internally, equity funding, a financing mechanism reliant on existing policy values, can slide into abuse when manipulated improperly by agents or executives. While technically legal, piggybacking more policies without generating matching new revenue introduces expenses and benefits the few at the cost of long-term organizational viability. With an overview of these schemes, what truly demands attention is the intricate balance needed to address insurance fraud. Preventing it requires vigilance at every level, from designing smarter systems that track suspicious trends to enacting policies that allow transparency and accountability. By rigorously understanding each layer, we can strive for a future in which insurance lives up to its purpose: safety, security, and reliability. However, as the examples show, that challenge remains immense in an increasingly connected and innovative world where crime evolves rapidly. Thank you for watching, and as always, continue learning. Stay curious, and we'll see you next video.